What's up, everybody? Welcome back. So, guess what? We're hearing this big news about some massive rate cuts coming next. I've heard about them. I'm sure you've heard about them. So, Josh is coming. He's joined us. He's going to tell us what's going on, what should we expect, and why is this even happening, Josh?
You know what? A lot's been happening, right? Since we've just had 0.75% rate drops from the Bank of Canada. But you know what? Yes, or not yesterday, but this week, the inflation numbers for Canada came in. The market was expecting them to be just under 2% at 1.9, and it came in low, came in at 1.6%, which is quite a bit lower than expected. And, most of us as consumers are like, awesome, inflation is low. Things aren't going to be getting as expensive as fast anymore. Yet sometimes we want prices to go back down. That's called deflation. And you know what? We're getting dangerously close to that being the case. But deflation is actually really bad. If prices start to go down, what happens is people stop buying things until they've gone down, and it actually causes things to crash. And a crash is not what we want. We talk about things like a soft landing, and it all sounds nice and fluffy like we're in the clouds, but it's actually really important because as much as it hurts when we have the inflation, right? 2 years ago, 8%. And lots of other things were increasing way faster than 8%, right? But now that we're back down closer to that 2%, that's good, but we're actually below the target of the Bank of Canada. The bank's supposed to keep it around 2%. It's not been doing a great job because of lots of factors, but if we get below 2%, we need to actually bring it back up. And it's not just inflation that's crashed. When they gave their announcement about 5 weeks ago, they said if the data comes in below our estimates, we're going to be very open to decreasing the rate even faster. And in their forecast, they thought that the GDP, that's how we measure the growth of our economy, they thought it would grow from an annualized 2.4% in the second quarter to 2.8% in the quarter that just ended at the end of September. And we don't yet have the official data yet, but all of the estimates are suggesting it's not going to be 2.8%, but it's actually going to be 1.2%. So that's like massively less than anticipated. And recession is defined as having quarters back to back where that GDP growth is actually below zero. And with population increases high, as it's been and steadily been, our actual GDP per person has been below zero already, and this is pushing it even further. So on an individual basis, it absolutely feels like we're in a recession. So with that in mind, the Bank of Canada has another rate announcement coming up next week on October 23rd. And the market is currently predicting, in spite of strong jobs reports that have come in and other good things, we want people to have jobs, but in spite of that, there's still enough overall pain and bad going on that the market is predicting about 80% chance we're going to see a 0.5% rate drop next week on October 23rd. And the next rate drop after that, Jay, is scheduled for December 11th. Between the two of them, 100%, we're going to see at least 0.75% drop, likely a 0.5% drop on each of them. So nice little Christmas present to Canadians is a 1% drop in the interest rate. And that impacts a lot because we're talking about mortgages and real estate. That impacts anybody in a variable rate mortgage. You're going to see your payment drop. I don't have the exact amount here, but you are definitely going to see a payment drop for most people on variable rate mortgages of a couple $100 between those 2.5% rate drops. Also, we tend to find that as the bank drops rates, we also see downward movement in fixed interest rates. So there's lots of good coming as far as the interest rates are concerned, which should help spur the economy, get more investment going on as the cost of borrowing money continues to go down. So that's what we've got.
We've definitely seen a lot of our buyers that are like, I mean, we've been educating them, right? So we're like, you guys, the rates are dropping, the rates are dropping. We've been saying this for a long time, but I see a lot of other buyers are starting to clue into this. And I think we're going to need to be careful as a buyer that we don't wait too long to start buying, because as the rates drop, prices are going to go back up.
Yeah.
Buyers are going to, I think we're going to have an early spring market as a result of these drops. Who knows what's going to happen early next year? We also have an election going up down south. So there's a few other variables, but I do expect that we're going to see buyers start returning to the market sooner. And so if you're a seller, that's great. Hang on. But
Yeah, buyer activity tends to pick up kind of in April, but it might be February this year, right? So
Every builder that I've talked to has said we're planning for a February, mid-March sort of. We're going to have all of our product ready for then. Typically, they're ready in April. So everybody's pricing this in, and I think everybody's planning for this. We'll see what happens. Anyway, this is fascinating. If you need to get a hold of us, our numbers are on the screen. We try and release these once a week. If you like what you're seeing, click the bell, subscribe, drop a comment. We'd be happy to talk with you there as well. Otherwise, have an amazing rest of your week. Josh, thanks for the help. Thank you for joining us. Look forward to seeing you next week.
Thank you.